Good morning. Markets all closed with greenish glee Friday after the US's disastrous non-farm payrolls report, a promise of more cheap money to stick into stocks at the little guy's expense. Not surprisingly, the Russell led gains on Friday with a 1.25% increase as investors realized rate hikes were still far away. U.S. labor data disappointed dramatically with a mere 250,000 new NFP jobs. Earnings and participation, though, increased, but then again, so did unemployment by 0.1% to 6.1%. Even President Biden weighed in on the figures with raw material shortages and even reluctant workers at blame for the poor performance. Republicans quoted by Reuters are in agreement that generous unemployment benefits are the cause, with some states reportedly ceasing their COVID payments. The DAX led benchmarks up Friday to the tune of 1.33%. Germany's industrial production figures from March show a welcome 2.5% increase as the nation's trade surplus retreats to 14.3 billion euros. In France, the deficit increased by 1 billion to 6.1, while in Italy we're seeing a 30% increase in retail sales following February's 5.7% contraction. Yesterday, a French government spokesman said his nation may consider sanctions on the British for their failure to comply with the Brexit fisheries agreement. And Turkish President Erdogan said his country is still striving for membership in the European Union, but they need to make some structural changes first and improve their attitude. In about a half hour, we'll be getting UK house price data for April, followed by the EU Centix investor confidence marker. Chinese indices are down this morning, recovering from Friday's Stockfest. The Nikkei and ASX are both still up. The yuan continues its one-month rise, hitting 0.1555 against the dollar overnight, as the nation's trade surplus triples to $42.9 billion in April. Meanwhile, the Australian dollar could be losing some of its edge after last night's 0.5% drop in retail sales Q on Q. At midnight tonight, new home sales, followed by China's consumer and producer inflation an hour and a half later. U.S. drillers are taking advantage of oil's upward bound, the Baker Hughes count up by 2 to 344 active rigs, and gold sailed past the 1800 mark Thursday, settling on 1830 as support overnight. We have a bit of negativity showing at the moment at the very edge, if you can see. No, it doesn't show in that one, which could mean an end to the caper, but down below the MACD is preparing to cross above its signal, so wait and see. Later this afternoon, we've got ISM's New York Business Conditions Index and 3- and 6-month U.S. government bond auctions. Dogecoin received a lot of attention over the weekend thanks to Elon Musk's SNL appearance, some good, some bad. On one hand, Musk has announced a Doge-funded SpaceX launch, but then he went on to call the whole enterprise a hustle, pressuring prices down. The token's value has increased by 130 times since the start of the year. Its current market valuation is about $80 billion, according to CoinDesk. Amazon lost an appeal to find out ahead of time who were the witnesses in an upcoming hearing on the company's scare tactics during the April unionization vote in Alabama. In Australia, Star Entertainment is ready to take control of Crown Resorts after an inquiry in Australia accused Crown of laundering money for Chinese organized crime syndicates. And AIG will be selling nearly 20% of the company value in an upcoming share offering as CEO Peter Zaffino takes his new chair. On Thursday, the company reported a 57% increase in pre-tax income, despite a 53% drop in premiums. Adidas surprised earnings watchers Friday with a €5.25 billion revenue and €2.60 in earnings per share. BMW did less, missing on EPS by €1, but still surprising to the upside with a 26.8 euros in revenues. Today we're looking at results from Marriott, Panasonic, and the Suez Corporation. And so on that note of Western imperialism, we see another dramatic week up ahead with lots of expectations, lots of dreams. See you all tomorrow.